Put in your name in the chat box if you can hear me. Put in your name in the chat box. Good evening. If you're on the call tonight, let me know who is in class. Put in your name in the chat box so that I can know who is attending. Okay. So before we get into the class today, get into the course for today. Let's quickly do that. Your name in the chat box. Your name in the chat box. And then, like I said on the group, today we will be reviewing that that video I sent. I hope we watched it. So let's go. So quick one. So I sent us that video because it's a video that highlights the successes of young Nigerians like us who made the decision to, you know, master their skills and learn trading, master their crafts, and they paid the due. They spent a lot of time. They put their heart. They set a goal. They were determined, and they were ready to commit a lot of time, a lot of effort into learning. They did that, by no stroke of luck. They put in the work, and I believe God's mercy and favor was upon them. And today, they are hugely successful. Of course, we have several other testimony apart from ABFX and apart from ABFX, okay, we have several other guys, several other guys who are very successful in trading. Um, I just decided to share with us the testimony of just two of these guys, just the two of them. ABFX and what's this other guy name? Okay, Jeff Benson, yeah, Jeffrey Benson and ABFX. Okay, so if you want your story to be like that, you just need to, understand that this is the beginning of your journey. This Forex mentorship program is the beginning of your journey. In no time you're going to be there. Yeah, welcome, Mr. James. Mr. James, good evening. Super excited to have you on the call. Good evening, sir. Let me quickly ask you, did you watch the video I sent? Did you watch the video I sent? Let me quickly ask you, did you watch the video I sent? Did you watch the video I sent? Just communicate with me through your chat box. Let me know. So, did you watch that video? I sent a video. Did you watch it? What do you have to say? Did you watch that video? I sent a video. Did you watch it? What do you have to say? Okay, you're unable to watch it. Okay, really? Okay, that's fine. But then everything about that video talks about the story of, young guys, and I felt the need to I felt the need to hold on, to show all the power, that's there with trading. The the power that is there in trading. And so that's what I wanted to do. I saw the power that's available when you master trading. Um, when you master trading, the forex trading, when you put everything in your heart to it, you know, you can make a lot of success out of it. You can make a whole lot of success out of it. So let's get into the class. So last week we looked at risk management, how to calculate our risk using the risk calculator. And I did tell us that when it comes to trading and you want to enter any trade, the most important question you need to ask yourself is, how much am I willing to lose? How much am I willing to lose? It's very critical. You must. So that when I tell people, yes, people say forex trading is very risky. I say yes, but when you know what you're doing and you do not abuse risk management, you are going to be very successful. Because even before you get into any trade, you have already decided what you are willing to lose. Okay, you have already estimated and calculated your risk. I have $200 in my account and I want to pick one trade. I've already decided out of this $200, I'm only willing to lose $5 or $10, as the case may be. So mastering risk management is going to be very critical to our success in trading. Please don't forget to chat me up if you have questions, if you have anything, you have questions, you have opinions or anything, you just need to communicate with me. Use the chat box. Okay, so let's quickly go. Quickly go to YouTube. No, no, not YouTube now. Okay, sorry guys. Just hold on, hold on, guys. Please, just give me two. Okay. Okay. So we can. Sorry, I just need to take a short break. Mama, I do. Okay. Okay. So we can. Sorry, I just. So yeah. So this week we're going to be looking at trading plan. Okay, we're going to be looking at trading plan. What is it? The trading plan is very important. You see, like any other business that you are doing. Okay. So sorry guys, just hold on. I'm trying to sort out something here. Just hold on. So, sorry guys, just hold on. I'm trying to sort out something here. Just hold on. Okay, so I'm back. I'm back with you now. I'm back with you now, guys. Okay, so I was talking to us about trading plan. Trading plan is a very, very important subject in trading. It's very, very important in trading. You know, it's just like you wanting to start a business, having a business. You need a plan that details the entire fabric of that business, how the business, the operations of the business, the marketing of the business, the the organizational chart of the business, how this business is going to run, how the business is going to move, and all of those sketches. So trading plan in forex trading is very important. You should not trade without a plan. Now, the beginning of your success, apart from the fact that you have acquired the skill, the beginning of your success as a trader lies in your trading plan. What is your trading plan? And what is a trading plan really? A trading plan is an organized approach to executing a trading system that you have developed based on your market analysis and outlook. It's an organized approach. Can you see that? To executing a trading system that you have developed. So the whole essence of a trading plan is to give you organization, but it goes more than that. Just giving you organization. It's also, it helps you develop a trading system, based on market analysis, based on your outlook, and then while you factor in your risk management, your personal psychology to the whole. So it's a system actually. A trading plan is a system. This system shows you how to trade. It shows you what to risk. It shows you how you will deal with losses, how you will deal with profit, how you will approach the market, how you will, when you will go into the market, when you're going to come out into the market. It's an entire system. That's what a trading plan is. Now, don't forget, no matter how good your trading plan is, it won't work if you don't follow it. See, I've been long enough in this market, and I have failed and I've succeeded. I've lost money and I've made money. And one of the mistakes that personally that I made was the mistake of not doing things like this, having a trading plan. We didn't have a good mentoring system. We didn't have someone who could show us, who could tell us that, these are the things you need to put in place. We were learning online. We were learning. So we had to basically actually, crawl our way into success in trading. It was later when we started embracing mentoring that we realized that trading plan is very important. Now, let's look at what, wait. let's talk a little more about what what do you have in your trading plan? What should you have in your trading plan? What do will you should you have in your trading plan? Uh, in your trading plan, let me your trading plan, you should have information of your strategy. Your strategy. What are the conditions for me to enter a trade? That should be in your trading plan. What are the conditions I want to see before I enter a trade? It should be in your trading plan. Something is missing in my slide. Just give me a minute. Let me check it out. I don't, why is it missing? I have a trading chart plan, but I'm not finding it here. Oh, sorry. Just a moment. I think I must have jumped. I must have jumped my okay. I've seen the issue. I've seen the issue with my slide. Sorry. But let me jump to it. Okay, so this I'll go back to other topics. So what should you have in your trading plan? You should have your strategy rules. In your trading plan, you should have your rules that guide what market you will be trading. What trading pair will I be trading? Am I going to be trading Euro USD? Am I going to be trading Euro Pound and Euro GBP? Am I going to be trading Euro JPY? Am I going to be trading, gold? Am I going? So your strategy rules. It's your trade in your under your strategy rule. You should have information about what time of the day you're going to be trading. So your trading plan is a workbook for you, or better still, is a template for your trading. So you should have it written down somewhere. You should have information about the time you are going to be trading. What time of the day is trading suitable for me? What time of the trade is trading suitable for me? Is it in the morning? Out of balance. I'm looking. Is trading suitable for me in the morning, in the afternoon, in the evening? And a lot of things comes into this, because you really have to ask yourself a question: what kind of life do I live? Am I a career person? Am I the type that is doing 8 to 5 job? If I'm doing 8 to 5 job, when would be the best time for me to trade? How when would be the best time for me to analyze my trade? When would be the time for me to enter the trade? So it should be something like, for example, maybe you decide that, okay, I have a 9 to 5 job, Mondays to Friday. So what can I do? That means I'll be analyzing my trade, the market, by Sunday. I'll do my market analysis by Sunday, identify where I want to enter the market, identify where I want to exit. Am I going to be using a buy limit order, or am I going to be using an instant market order? All of these questions are going to be answered when under your strategy rules. Okay, so a trading plan, in designing a trading plan, you're designing your strategy rule. A lot of things you have to bring into your life, your family life. Okay, yeah, I'm going to be trading. How is it going to affect my family? So that you don't want to be trading when madam says she needs your attention, or you don't want to bury your head into the computer analyzing when madam says she needs you. So you need to factor in all of these things in your trading plan. So your trading plan should have information about what time of the day you want to trade, what time when you want to be doing your analysis. your entry rules. What are the rules that informs my entry into a trade? What are the things I need to see? What are the conditions that must be met for me to enter a trade? When do I want to take profit? What are the rules around my taking profit? Am I going to be using technical levels to pick my profit, or am I going to be using risk reward as the basis for picking my profit? What are the rules around my stop losses? How do I determine my stop loss? So all the rules under strategy has to be determined. Risk control is another thing that should be in your trading plan. What is my minimum risk reward ratio? How much will I risk to gain how much? Am I going to be risking what do you call it, 1% to gain 3%? Am I going to be risking 2% to gain 3%? What is going to be my risk ratio? Those informations are very important. Okay. So those information are very important. Then, like I said, what percentage of my account am I risking? I think we discussed this when we were talking during our last session about risk management. What's the percentage of my risk? What is percentage of my risk? And I told you, I said, don't risk more than risk. Let your maximum risk when you start trading be maximum 3% on every trade. But 1 to 2% is good on every trade. So what's going to be my percentage of account risk per trade? Then number 3 thing under risk control, what will be my maximum drawdown allowance? So maximum drawdown allowance means I have $100 in my account. I take let's say we take 3 trades. Now, how much drawdown do I want to see of these 3 trades on my account? So if these 3 trades, I am running in a loss on the 3 of them, or on my account to the maximum of $10, that's already 10% of my account. So is my drawdown, my total drawdown on my account that I can permit going to be 10%? Is it going to be 20%? Is it going to be 50%? So if it's going to be 10%, my stop loss must reflect that. So my stop loss must reflect that I am putting 50% as my what do you call it? If 10% is your maximum drawdown that you can take on your trading account, then each of my trades entry that I enter, the stop loss should reflect that. By the time all those trades each stop loss, 10% of my account should be what is exposed, nothing more. Then, talking about execution, your trading plan should also define your execution. What broker am I going to be using? What platform am I going to be trading on? MT4 or on MT5? What's going to be my screen layout? Then number 4, talking about trading plan, what's going to be my routine? What will be my pre-trading ritual? Pre-trading ritual means the things you do before you start trading. Now, like me, I always recommend being a believer, a Christian. Before I trade, personally, my personal morning ritual is I pray, I study the Bible before I go to my laptop. I have list of affirmation I read out to myself. I'm a successful trader. I earn $1 million annually trading profits as a trader. They are prophetic, or if you like, positive confessions. I have affirmations that shows I'm so grateful that I am successful. I'm grateful for all my profit. I'm grateful for all my losses. I learn from my losses. I'm not pained. I just have this affirmation. You can also develop your own affirmation. So those are pre-trading ritual. What about post-trading ritual? What will you do at the end of your trade? What are the things you will do? Do you understand? If I ended up in a loss, will I go and sink in a chair and sulk and be happy and be bitter and be sorrowful? You know, those are questions we need to. So a trading plan will help us determine and define our pre and post trading ritual. Then it will also, what do you prepare at the start of your trading day? What are the things you need to put in place? Internet, all of those things. You know, are these things all going to be in place? Then what's your favorite, what's your review and journal routine? I'm going to talk to you about journal under this module 3. So that's also going to be very important. What is your journal routine? How do you take your record? How do you take inventories of your trades and so on and so forth? Your trading plan, we have to define it. So I'll send you a sample of a trading plan that I use on the group much later. Then skill growth. And your trading plan should define how you analyze your journal to answer, how you increase your win sizes, how you can reduce your loss sizes, you know, the types of trade that you are good at, you know, and preparing yourself psychologically for trading. All those details are what a trading plan will do for you. Like I said, a trading plan is an entire system. So it's more than a document. Your trading plan is the one that builds your system trading. Is what gives you a trading system. We always say anyone that does not have a system of trading will not be successful as a trader. So that's what the trading plan will help you to do. So this is my recommendation to you. In deciding a trading plan, do that with a mentor or do that with a coach, someone you are following in the Forex market. Let them walk you through developing your entire trading system. Okay? I know some people who charge you to design a trading system for you. So you consult them when you want to, you need a trading system as a trader, you consult them, they help you design a robust trading system and they charge you for it. So it's a big deal in the Forex market. So let's go back to risk management. You know, I spoke to us last week about risk management. That was the first part. That was the first part of it, of that topic. Risk management part 1, where we talked about lot sizes, how to calculate our lot size. By the way, if you are just joining the call, let me know. Please let me know your name. Put your name in the chat box. Put your name in the chat box. Let me know your name, those who are on the call, because I really want to know people I'm taking so seriously, you know, as far as this coaching program, mentorship program is concerned. Because by next month we will start practical. I will go all out with us on the practical. During the practical, I want only people who have attended classes so far on the call. In fact, I may create a separate group for practicals. For practicals, when we go into analysis, the technical analysis, and I will teach you technical analysis like babies, like kindergarten up until the time you. So it's important. I know people, you can see my register here, people who attended classes. So like today now, I know Ayola Olukayode is in class today. So every other person in class, let me know, put your name in the chat box so that I can have you marked, your name registered for the technical class. Please go ahead and do that. Thank you, Mr. Kayode, for letting me know you're in class today. It's still not coming up. Okay, welcome, Mr. Simon, Mr. Debayo Simon. Good to have you on the call as well. Who else? I can see more people on the call. Please identify yourself. Identify yourself. Let me have more people. before I continue. So let me what's this? So let me who else is on the call? We have about 5 people on this call. About 5 people. I'm seeing about 5, 6 people here. Okay. Well, please don't blame me when my guy from Akure, Mr. TJ. Good evening. Good to have you on the call, Mr. TJ. Good. Thank you for the hospitality and support when we came to Akure a few weeks ago. Thank you so much, Mr. Tunji. Good to have you. Good to have you on the call. So let's one more. What other people on the call, please? Who else is on the call with us today? Who else is on the call with us today? Thank you. Mr. Tunji. Yeah, thank you, Mr. Tunji. Thank you so much. Okay. Well, let's continue. So let's talk about risk management too. Please, as you get on the call, put your name in the chat box. Let me know you're on the call. So risk management, the other side of risk management that is very important is the risk reward ratio. And now this is what the risk reward ratio does for us. It is measured by dividing the distance from your entry point to your stop loss and the distance from your entry point to your take profit level. Okay. So it looks at the relationship between your stop loss to your entry level and your entry level to your take profit level. Okay. So I'm going to show you how that is important shortly. So the relationship between these two numbers helps the trader define whether the trade is worth it or not. Okay, let's look at what I'm saying, and I'm going to give you a better analysis shortly. Okay, Mr. Kayode, that's noted. That is noted. Yes, that's noted. So let me quickly show you this. So this is what a risk reward ratio chart looks like. You can see here in ratio 1:1, you can see that your risk is equal to your reward. That means, for example, if you're about to enter a trade, so your risk reward ratio must be determined before you enter the trade. So you're about to enter a trade now, and when you look at your stop loss and your take profit, if you are on a risk ratio 1:1, it means if your stop loss is 50 pips, your take profit also is 50 pips. So you are risking as much as you are going to gain. But if your risk is 1:2, it means if you are risking 50 pips, your take profit is 100 pips. 1:2. Then 1:3 is like you are risking 50 pips. It means your take profit is going to be 150 pips. Now, let me now take you to why this is important. Let's go to the screen. Let me explain to us why this is important. Okay. Let me wait for my screen to for my screen to load. It's loading slowly, it's loading slowly. What is slow? Okay, hold on, let me do this again. Okay, maybe let me open the new screen. Let me open. Okay, good. So let's get into it. In time, in 15 minutes. So let's look at it. Let's say you have a risk. So let's say you have, we call it RRR. I hope you can see my screen. I hope my screen is very clear. I need to increase the lot size. Okay, good. So if my risk reward ratio, okay, risk reward ratio. So look at it. If my risk reward ratio is 1:1, it means if my, here's my stop loss, and my take profit. So this is my take profit at ratio 1:1. If my stop loss is 30, at ratio 1:1, my take profit will also be 30, isn't it? Correct, right? So this is it. If my stop loss is 30, my take profit is 30. See why risk reward ratio is important. I'm big on risk reward ratio. I always tell people about, don't, anything that will not give you a very effective risk reward ratio, any trade that will not give you a very good risk reward ratio, don't take it. So let's assume you take 10 trades. You take 10 trades and you lost 7, and you only made profit on just 3 of them. Okay, 3 trades. You only made profit on 3 trades. Can you see? At ratio 1:3, Abby, 1:1. Sorry, 7 times 30. Don't forget that these pips. Sorry, I'm trying to move this thing off the face. Sorry. Okay. So these pips, we are talking about pips here, okay? 30 pips. Why is this thing staying in my face like this? So we are talking about pips here. So out of these 10 trades, you lost 7 and you made profit in only 3 of them. It's a bad day, right? So 7 times 30 will give you 210 pips loss. 3 times 30 will give you 90 pips loss, okay? We give you 90 pips loss. I mean profit, sorry. So 230 pips is your loss. 90 pips is your profit. You will look at it, you are in a net loss of 120 pips. So you are in total, you have lost 120 pips. Why? Because your risk reward ratio is 1:1. 1:1. Now let's copy this. Let's copy this and let's create another scenario. Now, this second scenario, let's say what we are dealing with is 1:2. We are dealing with 1:2. Okay. And our stop loss is 30 pips. So our take profit is going to be 60 pips because it's 2. Okay. It's going to be 60 pips because it is 1:2. 60 pips take profit. So you are risking pips and you're going to, that's your risk. But what you are going to go in your way is going to be twice as much as what you are risking. Now, let's take this scenario again. You took 10 trades. And out of these 10 trades, you 7 and you lost 3. Now, 7 times 30, right? So your loss 3 times 60. 3 times 60 is 180. 3 times 60 is 180. So you see, if you now take the difference, your leaves over 10 trades, your profit is 180 pips. Okay, what's the difference? 30 pips. You see that losses is still in a net loss. It has reduced from 110 to just 30 pips. Let's create the third scenario. Now, this is the third scenario. For example, ratio 3. When you have 1:3, it means if you're stock 30 pips, your take profit is 90 pips. That's your, because it is ratio. Okay. This is what it means because it's ratio 1 to 3. Okay. Now, again, if you take 10 trades and you lost 7 trades and you only out of the 10. 7 times 30 is 230 loss, 10 pips in loss, while 90 is 270 in profit. Let me bring out the results in error. Let me bring out the results. So here, our result is our net loss. We have a net loss of 10 pips as our loss. In the second scenario, in this second scenario, we have a net loss of just 30 pips. Now let's look at the third scenario. In this third scenario, we have a net profit of 270 minus 210, 60 pips profit. So you can see the difference. So you can see the difference. So what does this show you about risk reward? It means the higher your risk reward, the more profitable you will be. So personally, what I recommend to my mentees is the minimum risk reward ratio you should use when you are building your trading plan that you should use for your trading should not be less than 1:3. Any trade that cannot give you in profit 3 times what you are risking, don't take it. That's my recommendation. Any trade that cannot give you 3 times as much as you are risking, don't take it. So a good risk reward ratio, we always, even if your numbers of losses are more than your numbers of wins, you will end up becoming profitable. Let me shoot this up a bit. Let's say you are taking a trade that is 1:5. You take 10 trades that are 1:5. This means that for every 30 pips you risk, you are making 150 pips in profit. Isn't it? Now you lost 7 trades, which is 210 pips loss, but you won only 3 trades. Now your 3 trades, let me quickly show you that. Your 3 trades is a lot. We bring home a lot. Because 3 trades is this 3 times 150. That's 450. 450 pips in profit. Just 3 trades alone gives you 450. Why 7 trades took only 210 pips from you? At the end of the day, you are still in the profit of 240 pips. You are still in profit of 240 pips. So in money terms, depending on your lot sizes, you are still in good profit. So the higher your risk reward ratio, as you can see, the more profitable you get to be. So risk reward ratio is powerful. So when we get to the technical analysis section of this mentorship program, we'll look at this practically, how we determine our stop loss, our take profit, so that we can target a take profit of 1:3, and we can minimize. So the lower our stop losses, the higher our risk reward ratio is going to be. The lower our stop losses, the higher our risk reward is going to be. Let me stop here and let me take your question. Do you have any question? We have 2 minutes to get out of this class. Do you have any question? Okay. If you have any question, you can put it in the chat box and then I can take them. So if you understand these things I just shared, just put in a 1 in the chat box. You understand risk reward ratio? Risk reward ratio. You understand it? Just put in 1 in the chat box. Risk reward ratio, you understand it? As I explained, put in a 1 in the chat box. Come on, put in a 1, guys. Let's go. If you are not and if you don't understand, put in 0. Put in a 0 in the chat box if you don't understand. I have 1 minute to get out of this. Mr. Kayode, talk to me. Is it clear? Mr. Simon, Pastor Simon, talk to me. Is it clear? Mr. Kayode said my chat is not visible to him. Really? But my chat has been it's been showing now. I'm live. My chat is clear. In fact, because as I'm monitoring this call on another device, and I'm seeing it. I'm seeing my chat. I'm hearing my audio very well. Who else is not seeing my chat? Who else is not seeing my chat? Let me be sure that it's not a personal issue. I need to be sure that this is not a general issue. Who else is not in my chat? Okay. Okay. Mr. Kayode, please. Okay. Yeah. Yeah. Mr. Olamide said he can see my chat. So, Mr. Kayode, what happened to your phone or your device? Maybe it's from your device. Okay. But okay, most importantly, I just want to be sure that we all understand. So anyway, Mr. Kayode, please, you can watch the replay immediately after this call. I am going to upload it. Watch the replay. Okay, you can see the ratio table. But that's what I have on right now. I have it on right now, okay? I have it on. Just, you can go and check the replay right after this call, so that you can see it, okay? So I want to say, yeah, Mr. Olayemi, you did not register your name, that's how I would have missed it. I say it's very important. When I say register your name, register, because very soon, by next month, I'll move you to a technical class group. And only people who I have seen in the sessions are the people I'm moving. So I need you to always register your name, because I can't know you're on the call except you chat me up, and by what do you call it, registering your name, your what do you call it, roll call. You do a roll call, just type in your name so I know, oh, Mr. Olayemi is on the call, so I can put it in my roll call, so that by the time I am moving people to the technical class, I know the number of people who have been attending these theory classes, and then there are the people who I get to move to the technical classes. So please always follow this instruction. Okay, so that's gonna be everything for tonight. Thank you, guys. It's a pleasure. So we are going to continue module 3 tomorrow on Wednesday. Wednesday class is going to be 9 p.m. Of course. We are going to continue with module 3. I left a topic in module 2. That's trade management. We'll look at it at the end of module 3. So, guys, I want to say thank you for your time. I appreciate you. God bless you. See you on Wednesday.